Hello, it's Fred Atwater here.
Every day I'm shuffling.
Party music.
Shuffling, shuffling.
All right. Hey, it's Fred Atwater here. That group is the party music. It made me think of when we were talking about last week, or sorry, it would have been January 26th when we sold out of the market on the high of the party that was going on in the market. And like I said, I don't always get it that right, but I did get it very, very right. I got it almost to the penny on the exit of the market. Talk about a couple things here today. Big, huge news day. It's 5:15 here in Las Vegas time. Just got back to the house. It's February 5th. It's a Monday, and boy, the market was did some. It had a historic day today. All right, the market dropped 1,175 points. When I say the market, I'm talking about the Dow Jones Industrial Average, and the S&P followed suit with about a 4% drop. All right, so what I want to show you here is the CNBC article that's here. Dow plunges, right? They got these dramatic words going on. Dow plunges 1,175 points in wild trading. All right. But let's focus on, so there's the 1175 right there. All right. And let's put that into context. All right. 4.6% down. Now that's, don't get me wrong, that's a big drop. All right. But let's put it into context here. And I Googled this thing up here when this guy was president, back when I was 17 years old. I was in 11th grade, I believe, 1987 time frame. And yep, Ronald Reagan was president. And back then, this happened. Let's go. Biggest market drop ever. All right. And what happened back in 1987? 1987. All right. 22% down on the market. All right. Point drop, 500 and something odd points. But notice it was the percentage drop that made that so much more dramatic. Today's percentage drop, 4.6% on the day. So you go, okay, is this panic in the street? No, 1175 sounds like a big number, but guys, we're in 2018 now. When the market trades up in the 26,000, 27, 28,000 range, okay, 1175, you'd actually expect to see those kind of numbers at some point. As an kind of an interesting aside, a few years ago, the market opened 1,000 points down. It was a flash crash, and my lovely wife Christy was standing on the floor in the New York Stock Exchange when that happened. I happened to be sitting. I flew back the night before. I flew back late Sunday night back here to Las Vegas, and Apple opened way down. I just happened to have a couple puts on Apple that I was gonna just let expire, and I sold them within seconds and made a bunch of money. Just telling you that the market can be very unpredictable at times, so you always got to protect yourself. What am I going to talk about today? Here we're talking about this 1,175 point drop, and over here on the S&P 500, we've been expecting this. All right, we have a 4.1% drop with a close down at 2648.94. All right, let us get rid of this party music here. Yeah, I did turn it off. Good. And let's look at what happened. So this is the S&P 500 right in front of you. And boy, look at that monster candle right there. That candle is on volume too. Look at that baby. And look, remember my sell indicator on January 26th, 10 days ago or so, whatever that happens to be if I count up the days. We had an RSI up in the 90s right there, and I said, guys, that's way too high. We got to bail. And that was that candle right there, sold right at close. All right. There's the following candle. Let's make this a little bit bigger so it's a little bit easier to see. I'm going to zoom in real quick. Worth of a quick review here. Boop, like that. Oh, man, that's pretty. Look at that. So there was the sell candle right there. Okay. The next day was an inside day candle, and at the top of a trend, it formed a bearish Harami. We had a bearish Harami confirmation there, and then this little shooting star, I guess you could call it, or maybe an inverted hammer. What I kind of find interesting about this is that this tail on that right there is just, look, you got these lower closes, lower lows. You got a series, this is interesting here, a series of lower highs and lower lows. That's lower lows, lower highs. That's an indicator of downhill motion, and we knew this. We saw it because we saw it back here with the bearish Harami. These three lower highs, lower lows were just confirmation of that, and then wham, we got on Friday a very strong, newsworthy day, 666 points down on the Dow Jones. This is the SPY, and then today, wow, look at that. Now, why was I not too worried? And this, I was actually not on the charts at all today. I just happened to catch something on the news at work or whatever happened there, and I was like, oh, look at that. The mark trigger that occurred here occurred at 269. Remember on the previous video, I had a mark point set up, a computer alert set at the 269 level. So all it did was buzz my phone, and it said, hey, market's below 269, and I went, oh, okay, that's interesting. Not unexpected, interesting. And then I'm like, well, let's wait. Went and got some lunch, and didn't really look at this until I got home here, and I went, oh, yeah, look at that. I think I looked at it once or something at midday. But boy, just near close, man, rapidly accelerating closing. So we broke through the 269 level, and I placed right before close here, or sorry, when I went out to check it there, I'm like, ooh, this is a good buying opportunity. So I placed a buy on close, and I thought it might close somewhere around this level, but it actually closed way down here at the 264 level right here. And we re-entered with 15% of the account at 263.93, because that would be the market on close. And look at the tail on that thing. That's interesting because that tells you I wasn't the only one with that idea. Okay, I'm just one guy out of millions that were kind of sitting on their heels waiting for this action. That little buying tail right there might signal an end, might be a end to the bloodshed. Now look down here on RSI. Okay, this, remember, relative strength. I already pointed out that's where we sold up on the high, and we're down here on this bottom line is actually a 30 line, which is the oversold line, and we're already hitting that. That's a very quick and sharp, very quick correction. I didn't expect it to occur that fast, but we're still going to look for the next couple days of action here. We'll look for an indecision candle that may look something like this. I don't know exactly what it'll look like, and then we'd look for another candle to pop up, something like, you know, this. Who knows what's going to happen here? Okay, I don't. What's going to happen tomorrow? Don't have X-ray vision, but we'll look for something like that to occur. This could be around the bottom of this. Let's zoom back out of this chart here, and let me see. Let me go back to the hand here. Okay, and this has a lot of tools on it, so we can use like a price. Let's put this at this support and resistance line right here. Let's see if that comes up to a nice point. Boom, look at that. Interesting, very interesting, guys. What I thought might be around the 269 level, this was my previous alert setting. What I thought might have been at this level right here kind of materialized itself a few dollars lower down at the 264 level, but it hasn't been verified. We have to wait for the next couple of closes to see if it verifies. There's another point that could occur. There's another one that might substantiate itself down here at 250. That says 259.99. I call it the 260 level. Somewhere in that zone. I don't know. That's why I only put 15% of the money back. And all of that money, this is cool, guys. This is how this works. The money that I put back here was the money that I made from all of that. So honestly, my original capital from last year is not at risk. It's all just gains that I pulled off right here, waited for this. This was more severe than I thought, like I said. And then I just put the money back on the table right here. Now, if this starts to do a reversal, this starts to show some buying opportunity here, I'm going to add some more money. I might only add 10% at a time. I don't know. I have to wait and see what the feel of the market is. This has been done very well, guys. I'm telling you, I nailed the entry on this one. Oh, I wanted you to see what I thought this might be. Let's take a look quick at, let's see if I go up here and I type in /ES, which is the futures action right now. I don't know, they're not going to be open at the moment. Let's see. Oh, they might be. Let's do a tick chart on futures. So this is what's going on. It's kind of spastic at the moment. Drawing tools, hand. Okay, this is what's going on in the market. Yeah, it's open. You can see because the trade prices are going on. This looks like an interesting sort of a support line right here. Well, I don't know if it'll break or not. It's at 2610 on the index. Remember, SPY is about 1/10 of that, so 261 on the index. Just a couple dollars down, not much. I don't know what'll happen. This is a consolidation period right here, an accumulation phase. Dow theory, that's a distribution phase. Here's an accumulation, and then we don't know what's going to necessarily happen from here, whether we get a break to the low side or a break to the high side. This is the same thing millions of times over. In the market, we get these phases, get things happening, and we'll see. Look at that. It seems like it's gonna break a little bit lower. I'm not too worried about it. We'll see what happens. And I will look again for a buy point in the market in the upcoming days. If it's there, if not, we can let it ride. It's done extraordinarily well for us in our account. So I used, and I definitely didn't use all the profits. I mean, I only put well, I put a decent chunk of change back on. I don't have to disclose how much it was, but it was all profits from the market as well. All right, guys, let's go back and type in the SPY, and oops, that didn't take. Oh, I did. It's just on a tick chart. Let's go back to a daily. A tick chart means the transactions that are constantly in motion right at the moment. Let's change this back here so it goes back over to the right. There we go. Boom, done. And I'm very interested to kind of see what this does over the coming days. We got this right all along here. Now we're gonna go and kind of see what happens. If you're a long-term holder, just keep holding. There's no reason. 1175 makes for a good news story. If it bleeds, it leads, but it's not. It's an overdue correction in the market, and the market is oversold at the moment. This indicator down here is telling me that right there. All right, that's that, guys. Have a nice night. See you later. Good luck, all.